Good morning, everyone. So today we're going to look at take advantage of the evolving Nordic issuing markets for banks and other financial institutions in those various markets. So let's go ahead with that. Next slide, please. So we're going to cover 5 areas in this webinar. Firstly, we're going to look at some trends in Europe. Then we're going to look at the Nordic trends, the challenges for issuers in the Nordic markets, which is a combination of both the trends that are affecting them, some potential strategies for success, and lastly, we're going to tell you a little bit about ACI, which my colleague Fredrick Rotvolnoph will do. So, next slide, please. So, payments for a long while didn't see a great deal of innovation in terms of the magnetic stripe card moved to chip in the 90s, but really from there an online started, but really since 2000 that a number of new players have entered the market. So the banking, this slide is to show the banking and payments landscape is now changing at a great pace. Increasing consumer demand for quick and easy access to accounts via mobile, the web, etc., has led to a greater reliance on technology for banks, and consequently innovations such as mobile and e-commerce are developing at a faster rate than the traditional card-based systems. New players, new devices and new channels will all challenge these traditional payment methods. This is an exciting time for the industry. However, the increasing consumer demand for speed and ease of use in the finance sector is putting banks under a great deal of pressure. Banks are required to ensure that m-commerce and e-commerce transactions run seamlessly and are secure, all the while facing growing competition from actually new banks and new payment institutions, which are now allowed under the regulation that's in place, and more on regulation later, and also new players, be these retailers, also taking banking licenses, new banks, and Metro Bank in the UK is an example of this, and ING Direct, and corporates such as Google, Facebook, PayPal. And most banks perceive these as the biggest threat to their business because they don't have the system limitations and legacy systems that banks have, and so can produce innovative offerings quite quickly. I mean, an example of that is the Google Wallet. Next slide, please. So these are the trends that are shaping payments in Europe. And these are a subset, really, of what I mentioned earlier in the global system. So, taking by example, we've already spoken about new competitors, and some of the examples are there. Regulation is increasingly shaping payments, and we'll discuss that in a bit more detail later. Price pressure, which is comes in twofold. In one, in terms of the customer will require some incentive to take up a new technology, and also reductions in interchange. We're seeing consolidation in the marketplace with banks joining together and also acquirers, PSPs and processors coming together. NFC is still in the marketplace and has really been the coming next big thing for about 5 years now. It's still likely to come soon. I think it's being moved forward perhaps much more slowly than most players wanted. The smartphone has developed, and the e-wallet is an integral part of things going forward. However, again, there is some discrepancy there. Visa and MasterCard both have a wallet, so do some retailers, and so do Google. And really the concern here is for the customer into how many wallets will the customer actually want, and what will he want in his wallets, and how will this work? So will he want loyalty cards, his bank card, his credit card, and more particularly, how does he decide which card to use in each case with the wallet? So the customer wants to work in a multi-channel environment now. He wants, in some situations, to still use the card. He wants, in some situations, still pay by cash, and even in some markets, check. So any player now has to offer a multiple part of channels to their customer base. There's still pressure to reduce fraud in Europe. EMV was a tremendous success when it was implemented, but it was designed for the face-to-face environment. And there will be new challenges, as we've seen when internet banking came along and internet shopping came along. The fraudster took advantage of a weakness that was perceived there, which had to be addressed via particular codes and etc. And now again, the fraudster and organised crime in particular are likely to attack the mobile method of paying, particularly as they see their revenues from the US dry up as the US moves to EMV. Micropayments, using no longer cash for micropayments is also an issue. It's becoming more and more to buy games, etc. on the phone. And also we're seeing restrictions in terms of where a card can be used under a certain amount. But the contrary to that, contactless cards allow a payment up to £20 or €20 at the moment in the marketplace. Multinational solutions will become the order of the day for merchants and consumers as they move to a cross-border experience driven by the SEPA requirements. The customer also wants an enhanced payment experience of point of sale. He wants to be able to get a clear view of what he's actually paid for and when, and also maybe the opportunity to review other items on his phone before he browses to buy at a store. So the situation is driving forward very dramatically, and we need to look at this in more detail in this coming presentation. So next slide, please. So in 2012, there were 100 billion non-cash payments in the EU. And part of this was steady growth in card payments. This is the European Central Bank figures. And as you can see, the steady growth in cards, credit transfers and direct debits. The problem that here and why there's not been the growth is there's been an introduction of SEPA credit transfers and direct debits, and they're due to be fully in place by February of next year. But there's been some concern about switching to these, particularly the direct debit side. And so there's not been the changes there that we expected. Checks continue to decline, but were unlikely to die away because the banks are moving from the situation of a paper-based processing system to look at image, which has been successfully implemented in other markets, in other parts of the globe, the US, for example, and also Australia. And we're now looking to see that in the UK that will also become an issue. So checks won't go away for the foreseeable future, in my opinion. And lastly, there is a growth in what are known as other payment methods, and this really encompasses all of the mobile and e-commerce that I mentioned earlier. So part of that will be in the cards amount, but some of this will also see new payment methods. Next slide, please. So, as we've seen, these again ECB Bluebook figures. The growth in cards is expected to continue. Credit transfers will stay around about the same level for the foreseeable future. We're not seeing great switches there, or the ECB are not. And a decline in direct debits as customers maybe look to other methods of payment. The decline in checks that I mentioned earlier continues, and there is still the growth in other payment methods. And this really is probably the part of the graph that I think will probably expand faster than the ECB are currently predicting. So, next slide, please. So let's look at this situation as against the Nordics. Let's look first at the next slide and look at infrastructure in the Nordics. So, Nordic infrastructure trends. The Nordics are by definition largely a debit market. Debit is the preferred method of payment in the Nordic customers, and this leads ideally to a movement to mobile, NFC, and QR codes and mobile banking. There's been a lot of interest in the Nordics in mobile. For the most, it's only been pilots with very few large rollouts. Sweden is quite fragmented on what solution to go for, and so far there are very few NFC or contactless cards in the market for payments. Other markets have also undertaken trials, in particular Norway and Estonia. It's still early days for NFC in Sweden, and it's still far from a mass market when it comes to smartphone penetration. At the moment, the use of QR codes and NFC is pretty even, but the potential for NFC is huge due to the large numbers of the card transactions already in the Nordic market. Generally, it's the telco side that has been driving NFC in the Nordics, apart from Norway, where DNB is involved. Contactless. There's also rollouts of contactless cards in some Nordic countries, notably Latvia and Finland. In Finland, contactless cards are provided by Nordea, and are using for contactless payment on low-value transactions, i.e. less than 20 to 25 euros. And there's been some suggestion that transit will be a way forward for that. Danske Bank has also announced it will roll out debit, MasterCard contactless payment security, again for low-value payments. E-commerce has seen lots of growth in this area in the Nordics, and not just from the traditional banking environment. PayPal has over 1 million customers in the Nordics, and there's also massive growth from Klarna, the Stockholm-based online payments company, who've got 10 million customers in Europe, and are proving that people do want to use e-commerce, a real threat to card issuers. There's also been, as a response to this from the banks, are looking to provide customer segmentation, so different cards for different customer bases, be these socio-economic groups like students, the high net worth customers, or travellers, etc. And lastly, the debit card growth, as we've seen, will continue in all Nordic countries. So next slide, please. The Nordic business drivers. We'll start with regulation and compliance. Because of its large interaction with SEPA, there's a considerable amount of requirement for regulations, and we'll talk more about these later, but there are examples of the Payment Services Directive 2, the e-money directive, the anti-money laundering directive, the data protection initiative, and we're now seeing guidelines on mobile from the European Central Bank and European Commission too. As we've seen, there needs to be product differentiation and customization to serve all the different marketplaces that are available. The regulation also feeds into pressure on interchange, and I'm going to look at that in more detail later, but the PSD2 sees a reduction in both debit and credit interchange, and we'll talk a bit more about that later. Mobile and innovation are also major drivers, as we've seen from the previous slides in the Nordic market. We will see the growth of this, I'm sure, in the foreseeable future, as the Nordics is one of the leaders in removing cash from the payment equation. And lastly, there's a threat of disintermediation and new players. The disintermediation comes from the fact that many of these new players are not covered by the ever-expanding rate of regulation. So, next slide, please. So, we said that the Nordics are largely a debit card market. And we also can be happy to see that in Europe, both Norway and Iceland have the highest ranking in internet usage, followed by Sweden and Denmark. So the Nordics truly is a leader in this marketplace. In particular, let's look at some of the markets. Norway has had high debit card growth, with also increases in credit and prepaid numbers. It has a domestic debit card scheme called Bank Accepts. And sectors for future growth include retail sales, mobile shopping and online shopping. The young population represent just about a quarter of the total population, and they will have different spending patterns from the standard marketplace. There will be further advancement in e-banking services and online shopping, and so this provides opportunities for card product providers in Norway. Finland. Despite having one of the smallest populations in the Eurozone, Finland is miles ahead of the rest of Europe in terms of card awareness and usage level. It has the highest usage of card payments in terms of transactions per inhabitant, and debit is the preferred payment method in Finland too. Growth in the Finnish cards and payments industry is expected to be driven by growth in the retail industry, increasing demand for prepaid cards, a new product for issuers, a better regulatory framework, an increasing market for online and mobile commerce, and a positive economic outlook. The increasing capabilities of smartphone devices and an exponential rise in the applications they can hold and falling prices will drive mobile commerce in this market. Contactless and NFC are also being introduced, and there's a growing market for online. So there will also be drivers of the growing increase in the country's card and payments industry. Denmark has the world's highest level of income equality. Danes have the highest per capita income in the world, and Danish financial markets rank 10th among the world's strongest financial markets. Since 2010, growth in credit cards and co-badged debit cards has increased in the Danish cards and payments industry in terms of circulation of growth of international cards, and the growth of international payment cards is expected to continue. However, the growth has actually been led by domestic debit scheme Bancorp. Its secure operations and high acceptability were key factors in the movement from cheques to cashless payments. The penetration of Bancorp is so high that almost every Dane has one of their cards. They are accepted at more than 80,000 shops and 13,000 online shops in Denmark. So e-commerce and m-commerce will continue to grow rapidly and now and in the future. Consumers' preferred method of e-commerce and m-commerce payment has been the payment card, and so again, a good opportunity and good news for the marketplace there. Sweden. Sweden is fast moving towards being an electronic and cashless driven society. Debit cards have occupied the largest share in the overall cards and payments industry. But as banking customers are becoming more sophisticated, the banks themselves are looking to differentiate their products. An ongoing theme, as we're seeing here, and card customization is gaining attention. Also, again, segmentation, looking at niche areas such as students and the high net worth customers. The increased capability of smartphone devices, an exponential rise in mobile server device applications and falling prices will continue to drive m-commerce. Contactless and NFC are also being rolled out across Sweden. So again, another good market, another very positive marketplace moving forward. Next slide, please. So, for credit cards, the situation has been less amount of growth than debit, but this is expected to move forward again with some increases across the marketplaces. However, partly driven, I think the increase in credit cards and how they fare in the marketplace will be driven by the response to the regulation that is in place. So, next slide, please. So now, we've talked around the trends and the increases in cards. Let's now look at the challenges for the issuers in the marketplace. Next slide, please. So, as we've seen, there's a growth in regulation, and this will force business model changes in terms of less reliance on interchange and maybe new fees, new capabilities, reduction in loyalty fee, loyalty availability on cards, etc. There's a change in customer dynamics. There are the Generation X, Y, Z, and more recently Generation Alpha have different requirements to the traditional customers of the bank. Banks have previously used silos of systems such that if a new product came along and a whole new system that was developed that didn't talk to any of the others, this has to change. This aging technology can no longer compete with the new, more agile players that we've mentioned earlier, the Google, the PayPals of this world. And also, the regulation plus a need for ever-increasing volumes will see new expansion into new geos and new sectors for payments generally and cards in particular. Next slide, please. So, the new players. These are the key challenges for the banks. The client bases of Google, Apple and PayPal are already comparable to that of many banks. Many of them have a regular customer base running into the triple-digit millions. They are known as the disruptors. Some have been successful, some less so. For example, Facebook payments never really made it as a payment technology. So, the banks have a reputation as old, trustworthy and risk-averse. They've made limited attempts to move to new channels and new products. We've seen there have been some successes, but they are limited by their aging technology and are slow to market. There's a general consensus that banks are focused on compliance and running the bank with limited resources for innovation. In contrast, the new players, the Googles, the PayPals of this world, are seen as new and exciting. They offer some risk to the customer, and indeed they have higher fraud levels than the traditional banking systems with EMV, etc. But that is part of the price they see for their business model and to get customer innovation. There is lots of innovation and they're using the new channels, but still their main function is to use the banking back grid for their payments. They have mainly new products and they are very agile. But, so, as we've seen, the traditional banks are relying on this age-old infrastructure that was developed in an era far removed from the banking landscape of today. The regulatory demands have exacerbated this, and as we've seen, they had to focus on run the bank. Isolated updates to systems, which is what they did before, is now no longer required. The need now is to look at perhaps focusing on new systems and new capability. However, banks should not lose hope of competing against these new players. If it can join forces both with one another, also IT software providers, to define industry-wide standards, then it has opportunities. So, as you can see, there is some competition here, but there is an opportunity. Next slide, please. So, let's look at all of this, the impact on the issuer. Now, this slide is what happens to issuers as they try to respond to the pressures we've talked about using the issuing systems that they've had for years and which may be out of date. It's easier to leave banks and switch to a competitor. Regulation has allowed this, and indeed there are now switching systems being developed to allow a customer to move from one bank to another in 7 days, and this was launched in September this year in the United Kingdom. The products need to be focused on customer groups. Customer dynamics means that customers expect more, and maybe a product focused on them. Now, we've already seen the segmentation occurring in the Nordics, but going forward, to stem losses to other players, this needs to be even more developed. Customers are building relationships with the new players, and they are a real threat, especially with the younger cardholders, the Generation X, Y, Z, and Alpha that we talked about earlier. They may have a better relationship. They may offer them the channel of choice, so they don't bother to look elsewhere. Okay, let's look at the next. So when the customer has a problem, they look for a good response from the system, and they don't get it if the archaic dispute systems are in place. There's been a lack of automation in these systems. There's been a lot of paperwork, and we still see this in banks today. Dispute processing is a key area for banks, and it really needs to be improved in terms of its technology. Could we please move back to the other slide, please? Thank you. So, in terms of revenue reduction, revenue has been hampered by regulation. And if we see more from the PSD2 in terms of reduction in interchange, this revenue reduction will continue and will have to be replaced by income streams from other areas. The disruptive competitors, they don't have the legacy systems holding them back that the banks have, and so they can be very flexible in their product offerings to customers. Online fraud, perhaps seen as initially a barrier to e-commerce expansion, has been addressed by one-time numbers, etc. to a degree, but customers are still scared of using cards online, and they need virtual cards that are not normally supported by legacy systems. We will also see further requirements for anti-fraud prevention in the mobile space as this expands into the marketplace. And lastly, there's a problem of bringing new card products to market. Because of the legacy systems or processes where new products can't be configured quickly, time to market is excessive. And if you do manage to work with a processor and deliver a product into the marketplace, typically there's a limited period where it's exclusive to a particular customer before the same functionality is available to all customers of the processor. So there is again an issue there in terms of bringing new products to market. And lastly, soaring costs. The siloed inflexible systems becoming increasingly different to move to new product systems and handle volumes being driven by these new systems. These massive costs and these silos even increase further the cost of compliance for the bank. Innovation forces additional systems because of these siloed systems. When mobile comes along, the response is typically going to be to add a completely different system because it's too hard to update the legacy systems. The resources for this archaic technology are also becoming more expensive because, quite simply, they're becoming more scarce. Less and less people understand the aging technology behind these silos, and so the people who can and do make the changes are becoming more and more expensive. And lastly, new card products require development. But what if you had a system that didn't require that development? A system that could provide functionality and flexibility and all the fee charging capability that you required. Let's look at that later. Okay, so next slide, please. Next slide, please. We'll look at the strategy for success. Okay, so there needs to be agility in the marketplace. There needs to be a capability, and we'll look at that. So, one platform for all needs. This is a situation where the bank uses one platform for all card types rather than the silos that we've talked about earlier. So, this will allow the capability to bring new products to market quickly, cut costs, and also mean the compliance is only on one solution, not several. Market entry without development, so being able to enter a new market or a new geo without integration points, without development, through configuration of an existing system. This will allow also you to build relationships with third parties to co-brand and maybe bring in some of these new players we've talked about as a partner rather than a challenger, and use these relationships to the benefit of both parties. Issuing fundamentals are critical for brand integrity. The hygiene factors of issuing a card need to be handled well. Compliance, exception processing, dispute processing, as we've seen. PCI DSS mandates, and to make sure the scale improves as interchange goes down. So the answer may be to send more transactions through the same pipe rather than having a network of different systems. And mobile. Mobile must be part of the plans, both as an issuer and an acquirer. Smart cards and mobile are now a prerequisite, not just a future requirement that can be looked at in 5 to 10 years' time. Okay, next slide, please. So, unrelenting regulation. As we've seen, regulation continues to be a large factor in the marketplace, and indeed has been the driver of some systems like faster payments in the UK. Let's look at this in more detail. To conform to these regulations is a high cost, particularly if these are legacy, older systems which require, as we've seen, expensive resource to continue to develop. There really needs to be developing a strategic approach to handling regulation rather than just making ad hoc changes. There also needs to be that there's top-line effects on revenue, and this means that there is a need now as interchange declines to create new sources of revenue and new business models to support the realities of this in legislator interference. And there needs to be consolidation to lower costs. And lastly, to lower costs further, you need more volume. So this will reduce opening of new markets to competition, the actual basis of SEPA. So you need to be flexible in product development and opportunistically enter new markets where you feel there is a benefit. So issuers are trying to mitigate the impact of regulation, and to do this, tactical responses are rationalising of the portfolio, maybe no longer needing classic gold, co-brand, etc., although focusing more on particular segments. But there may be cost reductions possible here. A focus on interest revenue and optimising other fees. Driving transaction volume further. Maybe not as stringent on credit risk as has been the case before, hence the flat credit card market we saw. Credit card issuers must refocus on interest revenue by improving risk decisions and management. There also maybe needs the expansion of credit lines and enhancing the portfolio management through maybe instalment loans, also increased fee revenue from merchants. They must also ensure that other pricing levels, such as fees, are fully optimised, though these may also be somewhat offset by the regulation. Example of that, there is now more pressure on interchange driven through the on all cards rule changing, and also an allowance for multiple brands on one card. Both of these have as yet an unclear impact on issuers. I think what's going to happen is, with all this regulation that's out there, the PSD2, the money laundering, anti-money laundering, the e-money directive, and indeed the data regulation directives that are out there, at the moment there needs to be some clarity from the regulators on how and what is going to be handled by what. Which piece of legislation actually applies. Most of these are still in a draft form and are still to be agreed, and I think there will be some changes from what's been published so far, which will again mean further changes to how issuers respond. Next slide, please. So, against all this backdrop, the customer also is increasing its expectations of what it will do with its payments capabilities. And as we've seen, the new entrants tend to be meeting the needs of the younger consumers particularly, and the response needs to be develop a strategic approach to how these new entrants work, and maybe change your approach to accommodate them as a partner, or indeed ensure that you have the capability to appeal to the customers who today are using the PayPal, Google, etc. of this world. These customer expectations are increasingly enabled by new technologies. And to do this, the challenges have identified new business models to take advantage of the new technologies, and the banks have to do the same. But they can also leverage their existing payments infrastructure to control costs, and maybe major on the fact that they handle disputes much more better than these new challenges, for example. There's also the generational shift. We've talked around all these new people coming out there, and there's a need for transparency and a move to real-time payments. And this has seen an interesting concept where there's an obsolescence of branches, where people no longer visit branches. But in fact, what has happened is this is not actually the case. The banks can make use of branches. There is still a situation where the customer wants to talk to someone face to face, and so the branch has changed, and we've seen new types of branches with tellers, virtual tellers, green branches, smaller premises, but more capability because of the functionality. Examples are iPads in a branch, and even trials of things like drive-through branches have been seen in some markets. This whole change will also be as more real-time payments take place. Next slide, please. So, in a conclusion, what does the bank do? What does the future look like? Well, at the moment, the burden for banks is it's an uneven playing field. The new players don't have to subscribe to all of the regulation that banks have to in their business. And although this is likely to change somewhat in the future, this will continue. The new players have less regulation to worry about. There needs to be a removal of legacy technology. This really is not sustainable anymore in the current marketplace with the dynamism we're seeing. Mobile is here. People are starting to use their mobile phones for payments. And we've said here banks can choose to participate. I think it's a given that they have to participate. There's a battle to be the trusted partner in the eyes of the consumer. And the legacy systems are part of the problem for banks here. We've seen only this week in the United Kingdom where RBS couldn't supply customers with cash from ATMs or payment capability at point of sale because the legacy system went down. So the bank needs to be the trusted partner of the customer, and also needs to have the data usage analysis, if you like, and the word big data is often mooted, so they know what the customer does and wants and can supply that capability. And lastly, the customer experience will drive the innovation. As we've seen, if the bank system goes down, the customer will look elsewhere. So the legacy systems, frail, slow to be adapted, will have to be removed. So I hope that's been very useful for all of you. I'm now going to hand over next slide to my colleague Fredrick, who will talk a little about ACI and how we can help in this space. Next slide, please. And please pass to Fredrick. Thank you.
Thank you, Richard. Can I have the next slide, please? So, ACI develops, markets, install, and support a line of software products and services primarily focused on facilitating electronic payments. In order to be in the forefront of the market, we invest 18% of our revenue into R&D. We are a global 37-year-old company, now with local presence in the Nordics, with an office here in Stockholm. Next slide, please. So this is our message about what we do cover. Our products span through card issuing, transaction processing, payment and fraud risk management, and payment back office. We support our 1,600 customers and partners with our knowledge and experience from all over the world within the payment industry. With a local presence in the Nordics, our message is that we can support your demands, and we are more than happy to explore it together with you. I hereby hand over to my colleague Richard again for the question session. Thank you.
Thank you. Fredrick, I'm just looking at the questions now, and unluckily for you, there's also a question for you.
Okay, thanks.
Okay, so starting with the first question we've got, an interesting question. Do you really think that the European Commission will go ahead and reduce interchange rates down to 0.2 and 0.3%? That's been their published aim. It is not legally law. It's not law yet. It's not, and there will be some discussion, I'm sure, around that further, with hopefully the chance for the issuers to make the case to retain interchange at a higher level. But this is the stated rates that we've seen so far. It's driven very much on the regulators listening to the retailers. It'll be interesting to see if there has to be some give and take. As I mentioned, there are a number of other pieces of legislation out there, like the e-money directive, anti-money laundering and data protection. And together trying to implement all of these may require some changes to some of the discussed legislative arrangements, and interchange may well be one of those. Okay, the next question that's come in. You say that mobile must be part of our plans as an issue in the Nordics. But what part of mobile? That's an interesting one. I think at the moment there is some broadness as to what mobile is defined as. The mobile phone as a payment device. At the moment it is a payment device already today, but typically it is for low-value transactions, gaming, etc. This will change over time. The contactless card development that we were talking about earlier will eventually allow a mobile phone to also make payments. But an interesting one here, and where mobile will come in further, is mobile itself as the terminal. The phone as the terminal for the small market enterprise. iZettle has been very successful and was developed in the Nordics specifically for this purpose. It's been accepted by the payment schemes, and so by definition the phone must play a part in payments, because it can make the payment, it can also receive the payment. The next question I have here, I wondered if someone would mention disputes. I'm not sure I agree with soaring costs from dispute systems. Surely dispute volumes are falling and are unlikely to cause such a problem. Well, dispute volumes are not falling. They are typically staying at around 0.5% of total transactions. And as the number of transactions are going up, as we've seen, so are the number of disputes. And so issuers have to become more sophisticated in dealing with them. There's increased technology to talk off the transaction so the customer does recognise it. And there are also new developments in disputes. The payday loan element, we're using a recurring transaction on a debit card, has been, as we've seen in our marketplace and with our customers, we've seen a number of them struggling to deal with these and having to put systems together to analyse the payday loans. Future dated payments are another area. But broadly, as payments continue to increase, and as we're seeing more move to contactless as well and other payment devices, dispute volumes will increase. The data we have so far shows that it's not a declining part of payments. Okay. The next one, Fredrick, I need to hand over to you. Can you see the question?
Yes, I see it now.
Okay.
I hear that.
Yep. Ask you to answer that one.
Yeah.
The
question is, so do you hear me?
Yep.
The question is that I hear that ACI are opening an office in Stockholm. What's the reason for the focus on the Nordics? And the answer is that we do have an office in Stockholm since this summer. The reason is several. One is to support current Nordic clients and have an increased presence in the local market. The Nordic market is in the forefront of, for example, online and mobile banking. But some banks have challenges within this area, silo-based, almost spaghetti platform, if I can refer to the vocabulary of Professor Peter Weil from MIT. In this area, we have helped banks in other parts of the world to get to the next generation of payment systems. And we have experience that we can bring to the Nordic market in order for you to meet the new expectations and the next generation of payment platforms.
Thanks.
Back to you, Richard.
Yeah, I have no further questions come up on the Q&A or the chat. I'd just like to thank the people who participated and Fredrick for his great input, and also to thank the producer of the webinar. And this will be available to customers going forward. Thank you for your time today, and I hope this has been useful for you. Thank you.